Morning, lovely people from YouTube. I'm just walking back to my office. I'm going to do an update on the markets right now. It's a beautiful day here in South Africa. A couple of people said they enjoyed seeing what I look like, so this is it just before we do the market briefing. I'm going to look at a couple of things today. We're going to look at stocks again. I'm going to look at natural gas, and I'm going to look at Nvidia, cryptocurrencies, and a couple of the currencies. So let's get to it now. Okay, away from the din of the noise outside. I'm going to look at one or two things here. We're going to look at natural gas very importantly, but let's have a look at, first of all, at currencies. And dollar index has actually fallen down a bit. We gapped down a wee bit last night, and you can see we're just falling back to the support now. I'm not 100% convinced anymore that the dollar index is going to hold up, so we're going to have to be a little bit cautious with this. And for that reason, I'm taking a long position on the pound. I've kept my short position on the euro, and I'm going to let one of them stop out when it gets stopped out, if it gets stopped out, and the other one run. And that way I'm sort of hedged both against the US dollar. So let's have a look at what the euro is doing. And so far, so good, really. We're holding beneath this big bearish reversal. We had two spike highs, wick tops. Last one was a bit higher than the previous one. Then a big bearish candle. We're still just moving up into the body of that bearish candle. As long as we hold roughly beneath 1.0840 or 50, and perhaps even 0860, we should be good to move down on the euro, but I'm not convinced we're going to hold. We do have good support beneath us where this 50-day moving average is, and structurally that looks pretty solid to me, so we'll have to see. So we've got these two spike high wick tops, and then we've got a wick low here on this bearish candle, so it's difficult to tell what this is going to do, and it all depends on the dollar index, as we saw earlier, and which is looking a little bit weaker. And we've got the 20-day moving average just curling up and the 100-day just below that. For that reason, I'm still remaining short on the euro, but I'm very aware that this support may hold at this 50-day moving average and this wick low. On the other hand, I'm looking at the pound, and this is the one that I've gone long on just a short while ago. And we're approaching the top of this, what could be considered a bullish channel. And although we had two wick tops against that channel top a few days ago, we've now, after yesterday's fairly bullish engulfing candle and a wick low, we're now approaching the top of this channel again. And if you zoom out and actually have a look at the weekly chart, there's every reason to believe that, in fact, this might be a bull flag after this dramatic spike low in September, which was caused by the near collapse of the British pension scheme, which put the banks and the markets and the British public into complete chaos. So it is possible that actually on the pound we might rally back up to 1.2820, maybe even 1.3, which is where these two moving averages are, the 200-day and the 100-day. If you're a mean reversion sort of trader, which many people are, those will be the targets that you'll be aiming for, around 1.28 to 1.3. We're at 1.23 right now, so that's 500 pips above us. That's why we're long on the pound, but short on the euro. I also want to look at the yen pairs, and particularly the dollar yen and the euro yen. Dollar yen, I'm looking to short. Actually, I'm looking to short all of these pairs, particularly the dollar yen and the euro yen and the Australian dollar yen, perhaps even the CAD yen. But I'm looking for rallies back up into these resistance levels, which I no longer have drawn on these charts, but they're roughly around about where these moving averages are overhead. The reason I'm not short just yet is that I think we might just manage a rally back up into these levels. So I'm looking for 142, 143 on euro yen. I'm looking for 133 to 134 on dollar yen and Australian dollar yen. Perhaps we can get all the way up, back up to 90, that big round number. We're at just below 88 at the moment. So those are the yen pairs. So bear in mind, I'd like to be short on all of these. Apart from the pound yen, and I think for the same reasons that I'm long on the pound dollar, there is potential for this pair to move up. There's that September spike low. If you have a look at the weekly chart, there's plenty of room above us for the pound Japanese yen to rally back up into some higher levels. So I think we might see some strength in the pound moving forward, particularly if we see further interest rate hikes in the UK, and potentially we see weakness creeping into the pound US dollar. So that's currencies at the moment. There's nothing else I really want to say on those. And then looking at the markets in terms of NASDAQ and S&P, we're short on the S&P. Have a look at my previous video on S&P and the reason we're short. Basically because we've got potentially a bearish flag that we're pressing up against. We've had several reversal candles against that level, and the S&P is just not showing any progress higher. With the demise of Silicon Valley Bank and various regional banks, I think we're going to see more pressure on US stock indices as lending to small businesses and startups becomes more difficult, and that's going to add some weight to the markets. In other words, to the economy and a general slowdown overall. I'm pretty happy with the short position on the S&P. However, bear in mind, as I said in the previous video, if we do manage to break up through the channel line and this 50-day moving average, there's every chance that we could move back up to 4,000, then 4,180 odd, and then perhaps even the top of this channel, which would take us to this previous resistance going back into August of last year at around 4,300. As long as we hold beneath this channel line and above that high a few days ago, particularly at 4,040, we should be good to go down on the S&P. And then NASDAQ, have a look at the previous video once again. We've got this potential double top. Actually, it's more than a double top. It's been resistance on several occasions and support going back a long way. And as you can see, all the way back into 2021, support and resistance all along this line. It's a really, really critical level for NASDAQ at 12,900, just below 13,000. Yesterday, we saw a little bit of weakness pull back in the NASDAQ, and we're now seeing a little bit in pre-market of further weakness moving down. First support, 12,400, and then down to the 12,000, 11,800 level. Let's see what happens on NASDAQ. We're not short on this, but we are short on the S&P. And I think this week's going to be very telling. We are at a very key level. And this week, we're going to have to decide whether we're going to bust up through the top of that or fall back down into these support levels. Could be, bear in mind, we just fall back as far as 12,400 and then move back up to retest this resistance at 12,900 or 13,000, thereabouts. All right, so let's have a look at our weird commodity selection here, including Bitcoin, as always. So I've got Bitcoin, gold, got natural gas over here, then I've got sugar, soybeans, and then crude oil. There's an interesting potential trade coming up on crude oil. We'll talk about that very briefly right now. First of all, let's deal with Bitcoin. We've got this resistance level here that's derived from previous support going back a long time. We've talked about this again in previous videos. You can go and have a look at that, but it's a key level, and you can see why I've got that pink line in. Previous support over there, support and consolidation over here. When we broke down through there dramatically, this area was established as a very important key level of supply and demand on the charts, and we've reached up into there right now, and we're forming this sort of dome top into this resistance level. I'm short on Bitcoin. I'm looking for a move back down into the channel and potentially the channel bottom, which would take us back down below 20,000. It's very important to know, though, that if we don't manage to get down through here, but first of all, this channel top, then a couple of these moving averages, there's the 20, there's the 50. If we don't manage to do that, and we manage to move up through this top, and there's potentially a long way for Bitcoin to go up even further, and that would take us up into perhaps 32,000, 33,000, 34,000, which is the next key level on these charts, as you can see over there. And if I clone this line and move it to that level, you can see why 33 odd thousand, 33, 34, 35 in that region is a pretty critical area. For now, though, we're short on Bitcoin. When it comes to gold, I think there's potential for gold. A lot of people are clamoring for gold to bust through 2,000, move up to 2.5, perhaps even 3,000 in coming weeks or months or even the next year or two. When there is such a lot of noise about anything moving to anywhere, I get skeptical of it. So I'm not 100% convinced that gold is going to move higher from here in the near-term future, depending on what happens with the dollar and stocks and markets and all the other factors that are thrashing around at the moment, including the bond markets and yields and all that sort of thing. Gold will have to decide whether we're going to move higher through 2,000, hold above it, move up into 2050 and then beyond. First of all, moving through these peaks that we formed in 2022 and 2021, and that's at around about 2050 to 2070. The first step will be to break above and hold above 2,000 and then above 2,050 and get through these highs and then form a new base for a move higher. I'm not sure how this is going to play out. I'm thinking of casually taking a small stab at long positions on gold. We are resting on this channel top right now, as you can see. There is support below us, of course, and gold is probably due for a pullback into these moving averages, the 20, the 50, the 100, all down in the 1850 to 1890 level, maybe even 1900, 1920. I'll be keeping a close eye on gold, looking for buying opportunities. I'm not sure it's the time just yet. Before we look at natural gas, I just want to finish off with crude oil, and if there's a little bit of noise outside, please excuse me. These are the rubbish trucks, and welcome to life in Africa. They make a lot of noise when they come past. So crude oil, I think overall we've got to expect the price to move down and test these supports even further and potentially move back down into perhaps around about the $50 level. At the moment we're at $73. We've bounced off support initially, that first minor support, but there is further support down below us at around about $60. We're at 73 now. I think I'm going to be looking to sell Brent crude oil on a retest of this bear flag bottom, which would take us up to about $75, perhaps 73, 74, 75, somewhere around there. That's where the 50-day moving average is. And I'd like to see us perhaps just poke through this 20-day moving average where we're testing currently, move up, perhaps trap a few of the bears in that region, and just move up to the underside of this channel, even a fraction higher, perhaps up to about $76 or $77, and just cleaning out a few of those short positions by doing so, and then continuing this move down. The trend overall is down. I think we can get to $50, something like that on Brent crude. So we'll be looking to sell this into around about 75 up to about 77, 78, somewhere in that region. It might even be that we try a small short position at around about where we are now at 73, considering it's the flat bottom of this horizontal support line. I think, though, we just need to clear out a few short positions and move up into a slightly higher level where there would be a better opportunity to sell crude oil for a move down into the 50s below the support at 60. So here we are on natural gas, and moving lower again. We've now convincingly broken through the support at around $2.20. Actually, I've moved that line down just a little bit to $2.16 because the base actually began to form slightly below $2.20. So now we know where that level is more accurately at $2.16 and not $2.20. Not that it makes a big deal of difference, but it's always nice to be accurate. We've moved down back towards this $2 level, and I've actually neatened up this chart just for you to make it look rather pretty. My charts are sometimes a bit Van Gogh, I suppose, or Van Gogh, but I've just neatened it up to make it easier to follow. So we continue to get lower lows and lower highs on natural gas, and today we have just continued with yesterday's move below that $2.16 level. You know my positions. I'm long $2.10, short $2.95. I have not adjusted this hedge still yet. It doesn't matter in which direction this chart moves because my profit is now fixed at a certain level. Having said that, we're now starting to move into the potential buying zone. And the potential buying zone is somewhere between $2 and $1.80 initially. And if we break down below $1.80, the next buying zone will be around $1.50. Once again, if you don't know where I get these levels from, please look at previous videos to find out why. I've also drawn these lines in green now instead of red, which I had them in sort of red or purple before, because that just reminds me that we're now starting to look for opportunities to buy. So we've got our first support zone that we're moving into right now between just above $2 and about $1.97. And then the next level below us is $1.80. And if I just zoom out, you can see there's the $1.50 level. I've drawn them in green, as I said, to remind me that these are areas where we're now starting to look to buy. However, we're looking for specific signals before we trigger long positions. I've also drawn a trend line in here, which is now beautifully formed and wasn't as obvious before. So we've got a downward sloping trend line, which we're holding beautifully to. We've got lower lows and lower highs on the daily candles, and we're moving into support. What we want to see is evidence of reversal. As I said in the previous video, that evidence could be any number of things. We could look for a break and a hold above this trend line. We could look for a break and a hold and a back test of the various support levels or resistance levels, and then a move up from there. We could look at MACDs, moving average crossovers, stochastics. We could look at RSI, whatever indicators you're looking at. I've said to you in my previous video that I prefer to look for candlestick reversal patterns because we're trading a commodity which comes out of the ground and the sea. It's based on digging things up, human emotion, and candlestick charts basically draw a picture of human sentiment and emotion and feelings about the market. And that's what we want to be trading whenever we're trading commodities. So I'm looking for candlestick reversal patterns, and those could be bullish engulfing candles, there could be spike lows, they could be abandoned baby, they could be morning star patterns, it could be one up, one down, any number of candle patterns. If you don't understand candle patterns or if you need to know more about it, I've got some videos on this channel about candlestick patterns, and I'll link one or two of those videos at the end of this video so you can go and click on those and go and read up about it, or just go and read a book or Google it on Investopedia or one of those websites. But I'm looking for a candlestick reversal pattern at or around the levels that I've got on the chart, and that would be $2.16, $1.95, or into this zone here around about $2, and failing that $1.80, and failing that $1.50. So any of those levels, I'm really looking for a reaction of them in terms of a reversal pattern, and then I want to see a hold above those levels before I start to initiate long positions in natural gas. Because I'm hedged, all I'll be doing is adjusting my hedge to the long side. I'm not going to be adjusting to the short side. I'm looking for long positions on natural gas. You've got the levels where we are right now, just above $2, down to $1.95. That's this green zone here. And then $1.80 below that. Okay, I've got a 179, and then $1.50 below that. So I'm looking for very specific triggers. Now, you may not like to trade with candlesticks. You might be looking for other indicators like, as I said, technical indicators on your chart, or trend line break, or just simple horizontal support and resistance line break, whatever. I'm looking for candle patterns in conjunction with breaks and holds above support and resistance lines. I prefer horizontal lines to angled trend lines. Generally, they're much more clear and accurate and more important than angled trend lines. But trend lines also play their role. So that's my overall strategy. I'm going to be adjusting this hedged position in favor of the long side when I see evidence that we may have changed direction, and I'll be doing it gradually and carefully with a great deal of risk aversion, because natural gas can be as volatile on the charts as it is in real life for its purpose. My target ultimately, this pink zone here, kept this pink because I like pink, and it's also different to these levels. So I've drawn the support and resistance levels in green because we're now starting to look for long positions. And I've drawn my target up here in pink, $3, 40, 50, 60, 70, somewhere in that region. And who knows, as I said, we may even get higher up into the $5 region. I don't think so, but you never know. This is natural gas, and it can be very surprising sometimes, as we all know. Well, I hope you found that useful. And if you've got any comments, please leave them in the comments below, and I'll try and answer as many as I can. And if you found this content helpful, please press the like button and also consider subscribing to the channel, and I'll see you in the next video.